In this session, we would be preparing another question where from the given transactions, we are expected to prepare the journals. Let's look at the question together. The question says, pass the journal entries for the following transaction in the books of XYZ Limited for March 2020. And they have given us 12 transactions. For these 12 transactions, we are expected to prepare the journal entries. Let's go about preparing the journal entries together. I'll bring up the format of a journal over here. And right on top, let me fill in the name of the firm. The name of the firm is XYZ Limited. And these entries are for March. On 1st of March, it says, started business with cash. So when you start a business with cash, please remember, cash would be coming into your business. So cash has come in and we have cash worth 50,000. Cash we know is real. Debit for real account, the golden rule is debit what comes in. Since cash is coming in, we have debited cash account. To capital account. Now capital account is personal. The reason why capital account is personal is because it is the proprietor's money. Since capital represents the proprietor's money, it is personal in nature. In other words, in this case, it is XYZ's capital account. Since it is representing a person, it is personal in nature. Golden rule for personal account is debit the receiver, credit the giver. In this case, the proprietor is giving, so we will have to credit the proprietor. So credit proprietor, and let's write narration being started business with cash. And with that, we have completed the transaction on 1st. 2nd March, the transaction tells us bought furniture for cash. When you buy furniture for cash, furniture would be coming in and you have furniture worth 20,000 coming in and you will be paying cash. So cash would be going out. Golden rule for personal account is debit what comes in, credit what goes out. Being bought furniture for cash. 3rd March. On 3rd of March, bought goods for cash from Matthew. When you buy goods from Matthew, please remember in this case, it is exclusively highlighted that you're carrying out the transaction for cash. So the two accounts which will be involved over here would be purchase account and cash account. The reason why I'm using purchase account over here is that purchase represents the raw material that you're buying. And since this transaction is for cash, I will be crediting cash account. Purchase account and cash account both are real. Golden rule is debit what comes in, credit what goes out. Being purchase of goods for cash. On 4th of March, the transaction goes like this. Bought goods from Matthew. Now, if you compare the transaction on 3rd and 4th, 3rd transaction, it is exclusively mentioned that the transaction is for cash. On 4th, it is mentioned that you're carrying out the transaction with Matthew. Since you're carrying out the transaction with Matthew, it is understood the transaction on 4th is on credit. So in this case, how you would be journalizing is purchase account debited and the amount is 2,000 to Matthew account. Matthew we know is real. We will be bringing in personal accounts since Matthew, with the nature of the transaction that you're carrying out with Matthew is on credit. Being purchase goods from Matthew for cash. 5th March. 5th of March, return goods to Matthew. So what could have happened is there were some goods that you bought from Matthew. You're not quite happy with the quality. Now you've decided to return it back to Matthew. So in this case, Matthew account debited. Matthew account debited 500 because Matthew is receiving, and this would be purchase return account. 500. Let's put the narration being goods returned to Matthew. So purchase return account represents the goods that you're returning, and purchase return account is real because it represents an asset, and that's why it is real. Sixth, transaction on 6 tells us sold goods to Amit. Here, it's not stated whether the transaction is for cash. So we are under the assumption that this, or we will assume this to be a credit transaction where you'll be giving the goods to Amit and Amit will be making the payment later. So here, Amit account debited 4,000 to sales account. Amit is personal, debit the receiver, sales is real, a debit what comes in, credit what goes out. So sales represents the finished goods that you're selling, being credit sale to Amit. Transaction on 7th of March, sold goods to Amit for cash. So now here, the difference between 6th and 7th. 7th transaction, it is exclusively stated that what you're selling, it is for cash. So cash account debited because cash is coming into your business, 3,000 to sales account, 3,000, narration being sale of goods to Amit for cash. Transaction on 8th March. 8th of March, Amit returned goods. So you sold some goods to Amit. Amit is not happy and Amit is returning the goods. So here it will be sales return account debited 300 to cash account. Now you sold some goods to Amit. Amit was not happy. Amit has returned. So sales return is real and goods are coming in. When Amit returns goods, you will have to refund the money back to him. So cash would be going out. So that's the reason why we are crediting cash account. Ninth of March, withdrew cash for personal use. When you withdraw cash for personal use, please remember it is drawings, and drawings account is personal, and personal or it would be XYZ's drawing account. And since here drawings is personal, debit the receiver. So drawings account debited, amount is 4,500 to cash account. Cash would be going out, being withdrew cash for personal use. 10th of March, paid rent. So rent account is nominal, debit all expenses. So we have 2,000 to cash account. Cash would be going out, 2,000 being payment of rent. 11th of March, paid Matthew. So Matthew account we know it is personal, debit the receiver. Matthew is receiving 1,500, and when you make a payment to Matthew, cash would be going out. So cash account being payment of cash to Matthew. 12th March, received cash from Amit. So Amit is making the payment to you. So cash would be coming in, cash account debited, and the amount is 1,500 to Amit account. Amit is personal, debit the receiver, credit the giver. Since Amit is giving, you will credit Amit account. Being cash received from Amit. And with that, we have completed the preparation of journal entries for this particular question.